Hello. This screen is illustration 2.6, which is in your textbook. I think it's also in the PowerPoints. This is the rules of debit and credit. So as you're working through the problems in this chapter, you can refer to this illustration to help you determine whether or not the account needs a debit or a credit to make it go up or down, whatever you want it to do. Right? This takes a lot of practice, but it is absolutely essential that you get this down now because everything else in the remainder of the course builds on this. Right? As I noted in my tips for success, when you're doing this, do not guess what account or whether it's a debit or a credit. If you're not sure, go back to this illustration and it will help you to determine if it is a debit or a credit that you need. The more you do this, the easier it gets, and pretty soon you won't have to look it up anymore. Okay, this is all based on the accounting equation and keeping the accounting equation in balance. Okay, assets go up with a debit on one side of the equation. On the other side, liabilities and stockholders' equity accounts go up with a credit. So if we have a debit for one amount, we need credits for the same amount total to make it stay in balance. Okay, the stockholders' equity, two main accounts there that we're going to deal with, common stock and retained earnings. Okay, as we saw in chapter 1, retained earnings comes from net income minus any dividends that are paid out. So that's what that third line is there, is the things that go into retained earnings. So asset accounts are pretty straightforward. It's cash, buildings, equipment, those kind of things. Okay, whether they go up or down, then you know whether you need a debit or a credit. Okay, liabilities, again, most of the liability accounts say payable in them. They are things that the company owes. The other transactions related to revenues, expenses, and so on, a little more complicated, and that's why I want you to look at this illustration when you are doing that. Okay, the next slide is also helpful. Okay, this is a simple memory aid about what happens here. Okay, the acronym DELOR, DEA, dividends, expenses, and assets go up with a debit. Liabilities, owner's equity, stockholders' equity, and revenue go up with a credit. Right? Because this is all balancing, if you can just remember one of these things, then you will know that the others are all the opposite. Okay, so DEA for dealer, those are dividends, expenses, and assets. They all go up with a debit. I generally suggest that assets are the easiest and cash is the easiest asset. So in your transaction, if cash is involved, say company receives cash for common stock, cash is an asset. Cash goes up when the company receives it. So we know we're going to debit cash. Now we know the transaction has to balance, so the other side of it has to be a credit. And if we are selling common stock to the stockholders, then our credit is common stock. Okay, so it just takes practice to go through this. Do as much as you need to, because again, everything else builds on this. Thank you.